And good morning, good evening, good afternoon, good night, wherever you are in podcast land. Brendan Cunningham, the real estate doctor for EXP. Here's Matt Paul.
How are you doing?
We're going to talk about all the things that you've been hearing in the news for the last week or so. Crazy stuff going on.
Yep.
Crazy stuff going on.
Yep.
Okay.
And a new concept.
One of the things that's a really hot topic right now, I've heard it on one of our competitors has a radio show on Friday, and it's a very good radio show. He's practically, his head exploded when he was talking about this, and maybe rightfully so. It's an opinion.
Yep.
I've heard one of our colleagues has another podcast. He was talking about it,
Yep.
and other people are talking about what is it? The 50-year mortgage.
Yep. Is it true?
Is it true? Is it real?
Yep.
And you know what? What's interesting is everyone said, "Oh my God, it's the work of the devil. It's this and that." And as one of our colleagues said on his podcast, he actually stole my whole thesis. Because the answer to any question in business, especially in real estate, should I do this? Is this good? Is this not? The answer is always, that depends.
Yeah.
Yep. Depends.
It's situational.
It's all situational. So let's look at a 50-year mortgage versus a 30-year mortgage. What does it really mean? Well, it's all interest, essentially. Yep. But on a 30-year mortgage, you're pretty much paying all interest for the first 7 or 8 years. Yep. You know, you get this much equity. Look at your mortgage bill every month. It'll break it down.
Yep.
And
Principal interest.
So if you're paying $1,000 for your mortgage payment, it might be $980 goes for interest.
Yeah.
You know,
depends on your loan, but absolutely.
But especially with the first, and then there's the tipping point. Yep. Once you get around 15 years, it starts to tip. Yep. But 50-year mortgage. Well, what does that mean?
Well, I wondered that loan would have a PMI payment the entire time.
You know what? They haven't even addressed that.
Yeah.
Okay. But the PMI would actually, yes, that's interesting because if you
usually
didn't put
it drops
20%
off at 80%.
down, well, it used to be mandated that it would drop down, but now what a lot of lenders are doing is they're locking you in and saying, no, the PMI is for the life of the loan. That would be sort of a kick in the ass.
Yes, oh, absolutely.
That would be a big kick in the ass.
Yes, that would be a factor that you would want to consider.
Here's the big argument against the 50-year mortgage. How are you going to build equity?
Yeah.
How are you going to build equity? Well,
one way, market appreciation.
Well, market appreciation, okay. It's really not the right question, how you're going to build equity.
Yeah.
Because you build equity by a couple of ways. One is market appreciation, which is the main way.
Yes.
And two is by doing improvements to the property.
Yep.
That's really it.
Yeah.
Now, you could also pay down your mortgage.
Pay down the
okay?
mortgage. Yeah,
most people don't do that. But a lot of people do, and I do, is I'll throw an extra payment in there.
Yep. Actually,
I throw an extra 2 payments in there. So I can bring a 30-year mortgage down to about 12 years if I do it that way.
Yep.
But people say, well, if I have a 30-year mortgage and I live in the house for 30 years, I own the house. That's true. Mm-hmm. Now you don't have a mortgage. Yep. If I have a 50-year, you're not going to last that long.
Most will. Yeah.
And especially as Peter Hunt pointed out, the average age of a home purchase has changed.
Yeah, it's increased a lot.
It's older now. I mean, the average guy's now about 40, where they used to be about 25.
Yeah. Yep.
So at 40, if you stayed in the house for 50 years, you'd be 90 years old, but you'd probably be dead long before that.
Yeah. Because
we're dying sooner in this country.
Yeah, unfortunately so.
Unfortunately so. But let's look where it could really work.
Yeah, like what's the big difference between the 30 and the 50? You know?
Okay.
So
if I buy a house, regardless of what the mortgage terms are, I get all of the benefits of home ownership.
Yep.
Here's my favorite benefit. I don't get the knock on the door from the current owner of the building saying, listen, I've sold the house and you need to go.
Yep.
And you get your eviction. It's happened twice to people that I know in this week. And because of the housing crunch, I don't know where these guys are going to find a place.
Yeah. Especially one that's the same type of cost of affordability.
Their rent is going to go. Yeah, I think these guys. I don't know. I don't even want to think about it. Okay, so I have home, regardless of the mortgage. Chances are, if this house is going to appreciate, this house is going to appreciate. It doesn't make any difference what the mortgage is.
Yep.
Okay. What else? What are the
You-
other benefits
benefits, or are we
of
still
home
on
of
Oh.
owning a home?
Well,
Just
then
period.
just having, say, like, as say you have the pets, and you have a dog that is
Say,
a
no one's
larger-
coming in and say you can't have a
a
dog.
larger
I want a
breed.
dog. I'll have a dog.
Yeah.
And now there's restrictions by towns. You can't have 18 dogs.
Yep.
You get unless you have a kennel license.
Yep.
But yes, I get all of the benefits. But here's the one piece of the puzzle I don't get. I don't get regular equity build-up
Mhm.
per month by paying my mortgage down. That's the one thing I'm not going to get
With the 50-year.
at the 50 year.
Yep.
Okay. I'll get a little toward the 40th year.
Yes.
You know,
Yeah. Towards the end, but it's just so front loaded with
it's
the interest.
it's just front loaded.
But with the interest, that is a write off. So with your taxes, it is a benefit.
Yes.
Yep.
Okay. So if I buy a house 30 or 40, it makes no difference. All of my interest is tax deductible.
Mhm.
So I'm going to have a much bigger tax deduction with
Yeah.
the 50-year mortgage than I am with the 30-year mortgage. And here's the other thing. I could have the best rent in town. None of it's tax deductible. Zero. Well, what if my rent is $2,500 a month, which is not unheard of in New York? In fact, that would be cheap in New York.
Yeah.
Okay, you're $2,500. You just blow it out. It's not tax deductible. It just goes away.
Yeah. Yep.
You blew it.
Yep.
Bad investment.
Yep.
So, who would take a 50-year mortgage? Well, somebody that's looking to get their payment down,
Yes.
or somebody that's looking to buy more home.
Mhm.
That's where it comes in. That's that depends thing.
Yep.
So I looked at some numbers. If somebody wanted a $500,000 mortgage at 6.5%, it comes out to just under $3,000.
That's the 50-year.
50-year mortgage,
Yep.
$2,993 and change. Okay. I mean, those are the numbers.
Yep.
6.5% every month, and I'm building this virtually no equity.
Yep.
Well,
But it's yours.
but it's mine, and I get all those other benefits.
Yep.
And on a 30-year mortgage, it would drop down to half, right?
You would think.
You would think. It only drops down about $350. It drops down to like 26.35. So slightly
$300.
$350.
Yep.
Okay, well, not even 330, whatever it is. So it's not that. It's like a 10% difference. It's
Yeah.
12% difference.
It's not as much as you would think.
It's not as much as you think, but I think where it would impact, especially in Western New York, it does give you the ability to go and pay more for a house.
Mhm.
And you say, well, why would I want to pay more for a house? Because that's the market.
Yeah.
Okay.
Yeah. If you want to get the house,
If you want to get the house, you may have to pay more.
Yeah.
I mean, it's what it is. We're still seeing multiple offers. We're still seeing.
Yeah.
I'm averaging it. I think it's 15% over the asking price.
Yeah.
So
On most properties.
yeah. So you'll qualify for more. Yeah. So it depends. Every person's parent out there that is young enough to be able to talk about numbers will say, 50 years? Oh, you out of your mind. But you know what? You really have to scratch beneath the surface to see how it could make sense.
Yep. Yeah, and how long are you planning on staying there? If you're planning on staying for 5 to 10 years, the 50 years is gonna, it's gonna cost you less money to own that house.
Every person that you sell a house to, chances are they're going to say, this is going to be my forever home.
Yeah, no.
It's never. The average American, depending on the location, the high number is 11 years, the low number is 7 years.
Yep.
Somewhere in between there, that's when people move.
I hear, the older generation stayed longer.
They
the
did.
younger
They stayed
generations
forever.
are burning, turning,
We're a
and
highly
moving.
mobile society, and
Yep.
we move.
Yep.
And here's what's happened over the years where it's changed. And it's interesting if you look at Western New York particularly, because we did it right
Mhm.
and the old-fashioned way.
Slow and slow.
We did do it long and slow, and we always used to
Slow
talk.
development, slow growth.
Yeah, but we used to always talk about ROI.
Yes,
Which
return on
is-
investment.
Well, that's what it means for most people.
Yep.
But in Western New York, it always meant maybe 10 years ago, return of investment. If I paid 100, when I sold it, I wanted to get the 100 out.
Yep.
It didn't go down. And then what happened is people started to think, and this is maybe as early as maybe 30 years ago, but certainly in the last 10 years, people don't think about a house as a place to live anymore. It's a great investment. Oh, and I can live in it.
Yep.
It's the second piece of the puzzle. So in terms of investments, investment strategies change over time.
Absolutely.
Okay?
Yep.
So what made sense 10, 15 years ago may not make sense today.
No, it's
And-
totally different.
And I'm sure, when I don't know how old are you when you bought your first house, but I didn't think about a 30-year mortgage. My
Yeah.
first house I was 28.
I was 23.
Okay.
Yep. Yeah,
I didn't think about
I didn't
it.
know much about it.
And
at
I
all.
knew I wasn't going to be there.
Yeah, yeah.
And frankly, when I was working in New England in the Boston market, I worked there for about 8 years in the late, what do we call them, the aughts,
What's that?
before it 03, 04, 05.
Yeah.
What do they call that decade?
I don't know.
I think it's the aughts or something like that.
That's interesting.
As opposed to the teens. I would say half of the mortgages that people were taking out when I was working there, they were interest-only mortgages.
So when I
They were interest-only
yeah.
mortgages.
Yep. Yeah, it was 2005 when I first bought it. It was a 5-1 ARM. So that's I mean, that was.
And then I've told the story here. When I bought my first house at 14.5%, I had negative amortization. What does that mean? Because most people don't even know what that means. That means you buy, let's say you have a $100,000 mortgage when you buy your house, right? And you live in it for a couple of years, and it goes down a little bit every month. So after 5 years, maybe it's worth, maybe you paid off about $5,000, maybe. Okay, so now you owe the bank $95,000. Negative amortization, you pay 100, and not only didn't it go down, but when you go to sell the place, they say, yeah, and you owe me 105.
Yes.
It goes the other way.
Opposite. Yeah.
And I still made money.
Wow.
I still made money. Why? Because it was a time of rampant inflation.
Mm-hmm.
Inflation's not rampant right now, but we still have it.
Yep.
And so sometimes, the terms of the mortgage are much less important than getting into the game.
Yes, absolutely. Yep. So you got to look at the big picture, and you got to consider all the factors.
You got to look at it all, and that's where talking to a good realtor as well as a really informed mortgage banker broker is going to be invaluable to you, because maybe it does make sense.
Yes, and maybe there's some questions you haven't thought about that will get raised, so that you can take into consideration other aspects, because, like when I first bought, I wasn't thinking of all the different options, and it was.
You're not thinking about anything. You're thinking about
I was
wallpaper.
so excited. What can I do to the bathrooms?
But, yeah, so that's an interesting argument, and it's not a matter of it hasn't been implemented.
No,
yet.
they're just talking about it now, but a lot of people
things
are.
happen.
Yep.
Things and they can be.
And I think they're trying to do something or get ahead of the housing crisis that we're having.
They are trying, and you know what? Is that a solution? I don't know.
Yeah.
Is it a possible solution? Maybe. Mm-hmm. I think the more products you have out there, the better the public is served. Now, before I got into the real estate market back in 1845, there used to be really one kind of mortgage. It was a conventional mortgage. And then when FDR came in,
then the
FHA, and then afterwards you had VA.
Yep.
So now you had two different kinds of mortgages. You had conventional and government-backed.
Yep.
Now there's adjustable rates. There's adjustable payments.
Mm-hmm.
There's 7-1
DSCR loans.
There's a million different kinds of
options.
mortgages out there, and now this is just another one that they're saying, well, and this could be another option for you. Yep. There's 15-year notes, there's 30-year notes. Oh, now there's a 50. Yep. Whatever you want to do. I can remember hearing when the rates were going crazy in 14, 16, 17, 18. They said, you know what? America just has to get used to this, because Europe's been doing this for years. Mm-hmm. And in Europe, what they do, and I don't know if they still do this, but at the time, you had mortgages and they would recast them every 5 years.
Oh, interesting.
No matter what your term, they'd recast it.
Okay. And
you'd be at the current market rate.
Wow. So that was always variable.
Yeah. So it was a fixed variable.
Yeah.
Or variable fixed.
Fixed for 5 years.
Yeah, fixed for 5 years, and then take your pants down. Because they're going to do it again.
Yeah.
So, so there's always been adjustments to the market, and this is and yet another adjustment for a possible solution. Obama had the thing where he was giving money back to people. Do you remember that?
Yeah. Yep.
Boy, did that put a needle in the arm of the market.
Sure
people
did.
were buying things like crazy. And that was maybe 15 years ago.
So it was about 10 years ago, because it was. I was new in the business, and I did have a client use that.
Yeah, it was like a big deal.
Yep. But if I remember, there was some fine print to it, and part of it had to be paid back if they sold in a certain amount of time.
It's like a lot of grant programs.
Yeah,
if you sell in under 10 years, give me the money back.
Yes,
okay?
yes.
We were doing you the favor to get you into the property,
Yep.
not so you could scam the system.
Yeah, or make out on it.
Or make out on it. This was not designed to be a profit-making thing. It was designed to give you a house.
But it did. It really sparked a lot of activity.
Tremendously. That was a good program for
the time.
I don't know in the long run if it was a good program, because they spent too much money from the government, which they didn't have.
Yeah.
But you can always print more money.
Yeah.
As we know.
Yeah.
So this is just, it's an interesting other program.
Yep. And it's nice to have options. Like we said, it's far from being something that's going to be in place or, something that you can look forward to using anytime soon. However, they're talking about it.
Yeah, and are people going to be lining up? Oh, I only want the 50-year. I don't think that's going to happen. I think probably, I don't know. I can't. I'll speculate. Say it'd probably be one person in 100 that does it.
Yep.
It's going to be few, but that person, it may make sense.
But then that still could spark, what we need in our market, right? To get some sellers to sell, buyers to get into houses.
Yeah. Now, one of the downsides that we're hearing from pundits, industry experts, is in the long run, the banks are going to make money
the interest.
hand over fist. Yeah. That's true.
Yeah, there's no doubt.
And in the long run, does it really fix the problem? I don't think it does.
It's a Band-Aid.
It's an interesting Band-Aid, maybe at best.
Yeah.
But yeah, is it going to drive prices up?
It could very well.
I think it will.
Yeah.
Why? Because in theory, you could bring more buyers to the table because that's what it's designed to do.
Yes, and the supply and demand issues are what we're experiencing right now.
So now you go back to basic. If you're bringing more buyers to the table and you don't have the supply, drive prices up.
Yep.
That's just how it works. I mean, there's no magic to this. No. So yeah, it's an interesting. It's a fun thing to talk about at this point because no one really knows how it shakes out, but they know. If this happens, this happens, this happens, this happens.
Always, yeah.
Does it bring more buyers to the table? Yeah, I think it does. If nothing else, it brings more lookers to the table.
Yes, absolutely.
And then they say, wait a minute, you're paying how much for how long? 50 years? Oh, of course you're not going to be here in 50 years.
Yeah, no.
But
or maybe some people that have been renting, that have been thinking about kicking around the idea of getting approved. Maybe if that is an option, they might be more likely because they'll assume it's more affordable. And
but everyone thinks they're going to stay forever, and when they use the term the forever house. Forever is a really long time, and a lot of things happen to upset that paradigm.
Unforeseen
things, and a lot of it falls under what I call the DDTs: death, divorce, and transfer. Yeah. God forbid, my stepdaughter, her husband's a great guy, and he was looking for the forever house. I think this is the forever house, unless something catastrophic happens. It checks off every box that there is. However, God forbid something happens, one of them dies. Well, now it's not the forever. Something's going to break there.
Yeah.
God forbid they get a divorce. Do people get divorced?
Of course.
Sure they do. I heard a really interesting statistic with respect to divorce. I was floored by it. Number one country in Europe, highest divorce rate. You'll never guess.
In Europe, I would probably say Amsterdam.
Well, that would make sense, right? Well, they got the hookers in the window and everything. They got all kinds of bad stuff there, right? Drugs on the street.
Well, Netherlands, right? Amsterdam's in the Netherlands.
Yeah.
It's a country. Yeah. So the city of Amsterdam.
Okay. No, it's Spain.
Really?
Really? It's the most Catholic country on the planet.
Yeah.
It's more Catholic than Rome. Because it's that dark Catholicism.
I wonder if Portugal is as well. Because
Portugal is right up there. Portugal's right up there.
Right inside of it.
It's right up there. Yeah.
Wow.
Which was shocking.
Yeah.
France, you can understand because they don't understand that you're not supposed to cheat on your wife. That's just part of the deal.
It's a cultural thing.
It's a cultural thing. Yeah. So, with respect to the forever house premise, you have death, you have divorce. What about transfer? Now,
reload.
Either the company reloads you, or your I don't know, your business goes belly up and you can't make it in New York anymore, so you go to Florida. Things happen.
Absolutely.
So the forever thing is an interesting mystique, and I have another relative that's looking to maybe sell their house out in Hamburg, Eden, and they have been in the house since 1947, so almost 80 years.
Yeah,
that's almost forever.
Yeah.
But now they're looking to get rid of it.
Yep.
So it was forever for their mother because they inherited the house. But it's not going to be forever for them. So we have a highly mobile society.
Yeah.
And people don't think about their house just as a place to live anymore. It's now not return of investment. They want to make money. They want to make return on the investment. Mm-hmm. And does a 50-year mortgage help that or hurt it? Answer is, it depends.
It depends.
It really depends.
Yep.
Now, you stay there for 50 years, chances are it was a bad deal.
Yeah, yeah. By the end of it, you're going to pay so much in interest. You could have bought that house 5 times over.
100 times over.
Yeah.
But if you're looking into in 2 years and out, that's a good program.
Absolutely.
That's a great program.
Yeah.
You keep your payments down.
Yep. You can write off all your interest.
Write off all your interest. Yeah, that's not a bad program for them guys like that. But so it'll be interesting. You take a good wait and look kind of attitude on that.
we'll keep studying on it and trying to educate you guys along the way as we learn more.
And another really interesting statistic, which coincides with yesterday, which was Veterans Day.
Yes.
Thank you all of our veterans out there. Thank you to all my father's family, my mother's family. Every last one of them fought either in WW2 or Korea. They were on every major battle, from the Battle of Bulge to my father's in the Battle of the Kasserine Pass fighting Rommel. I mean, these guys were great. So God bless all you guys.
Yes, thank you.
We continue them. But here's an interesting piece of trivia that I picked up, and I said, "Really? That's crazy." Veterans. There's a lot of benefits to being a veteran. One of which is you get to serve your country and know that we appreciate you. But there's veteran mortgages.
Yeah. Yep. VA. Yep.
Two benefits to veteran mortgages. Well, credit's not an issue.
Nope. And 0% down.
And 0% down. And I was shocked to find out that 70% of veterans don't know that.
Yeah.
That you can get in for nothing down, depending on what you're looking to buy.
Yep.
Now you may get outbid by somebody else, but that's showbiz. I mean, that happens to anybody.
Yeah.
But yeah, you don't necessarily have to have the big down payment like you and I.
Yeah, to compete with us. Yeah.
So yeah, I love finding little tidbits like that and say, wow, that's really interesting. And I guess that's a shame either on the veteran administration part, because they don't tell these guys when they're mustering them out.
That's right.
Or it's a shot against the realtor community, because they're not saying, hey, listen, did you know this?
Yeah.
Because we thought you knew this.
Yeah, exactly. Yep.
So, but yeah, 70% don't know you can get in for nothing now.
I had no idea about that.
Yeah, isn't that wild?
Yeah.
It's like the Spain thing. How could this? You guys are Catholic, you can get divorced. So
This has to do with something when you're, exiting the military. There must be a lack of education. On that,
but there's definitely a chink in that armor somewhere there that they don't get that message.
Yeah.
And by the way, for those veterans out there that want to take advantage of this, and you should, there's a couple of lenders out there that really do a great job on this and specialize. Premium mortgage in particular.
And they were just in business first because he had
he's the number one veteran guy. Number one veteran loan guy, and he does a great job.
His product, I had a client use a VA loan from him, from his company, and it closed in 45 days, which is unheard of for some conventional loans. So that was mind blowing at how good they were and what a nice product it was.
Right.
My client saved a lot of money by going.
And one other thing, they were talking about the government shutdown. Does it affect anything? Well, hopefully it's come to an end. But one of the things, it really doesn't affect the market all that much at all. It dips a little bit, then comes right back up. Every time there's a shutdown, by the way, it dips a little bit, then it comes back up. But what it does do is, especially for certain governmental agencies like VA, because they have to approve a loan, it may slow your process down a little bit.
Yep.
It's not
shut down.
It's not shut down.
Yeah.
But you may encounter that.
Mm-hmm.
Hopefully it's all resolved by this week.
Yep.
Maybe. Who knows?
Yep.
But that's a whole other story.
If you have any plans to travel by air, give
that's
yourself a lot of time.
Yeah, that's a drag. Because you may be taking the bus.
Yeah.
Oh my God, I'm taking the bus to Florida. But so.
A lot of things happening, so we'll try to keep
and we're going to bring you up to speed next week, or what we have. You're talking about 1031 exchanges next week.
Yep, we have a great guy from 1031 Exchange coming on the show to discuss 1031.
What does that mean? If you don't know what that is, it's a really, really cool program endorsed by the federal government since the 20s.
Oh, wow.
Okay? Yep. Not the 2020s, the 1920s, on how you can defer paying tax on your commercial property.
Yep.
And you can do it pretty much forever.
Yep.
It's a really wonderful program.
Sure is.
So we're going to talk about that. What else you got?
Excellent.
That's it.
Yep, that's it.
Get us out of here.
Yep, thank you. Please like, follow, subscribe. Thank you for your time tuning in. Let us know if there's any questions you have that we can address on the show.
And you listen to this guy because he knows what he's talking about.
So
I'm Brandon Cunningham, the real estate doctor for EX, and together we are those real estate guys.